Welcome back. Coming up on today's program is blockchain, the future of money. So I'd love to hear your thoughts about this. What are ways you think about to cut out the middleman or intermediaries in finance? This addresses the cost of trust, of verification. It's the essence of blockchain. Let me know what you think in the comment section below. Welcome to What's Next with Money, a program that holds the promise of second chances, strategies for growth, and financial empowerment. Let's get started. So is blockchain the future of money? Blockchain is often called the most promising aspect of digital currency innovation. It's really a backbone of fintech and a hope by some to lower the cost of trust and promote financial inclusion. For digital currencies, blockchain is the underlying platform. It might be considered a form of encryption to enable the sharing of common infrastructure of database retention. It moves data on a decentralized network and lowers the cost of verification. Now, this is really important involving sensitive data like contracts and money. A decentralized database, just imagine this, across a network of computers. Now, blockchain is often called a distributed ledger, and ladies and gentlemen, this is an old piece of accounting ledger. Imagine this is data on one computer. Let's say this data has been uploaded to one computer. That's not very secure, but what blockchain does, it distributes data to nodes, many other computers. And if you take this little set of flash drives, imagine this were a bunch of other computers, nodes. So the data on the ledger, and I'm going to drop this, is spread across all these. To make a change in that data, to alter it on one node, it has to have the approval of all the other computers or nodes. This is why blockchain is, or at least seems, so secure. For example, you can send Bitcoin to anyone else without an intermediary. Government or a company can't interfere. Blockchain is a set of records maintained on an interconnected, distributed ledger available to all users, effectively cutting out intermediaries and their associated costs. Here's another word for this, and some of you may have known this: disintermediation. Disintermediation. This is a very common phenomenon in financial services, and it's been around for the last 50 years plus. And this is the essence of a lot of financial services innovation. Our friends over at Investopedia call this the process of cutting out the middleman. In the financial industry, for example, an investor is able to buy a stock directly rather than through a broker or financial institution. Cryptocurrencies and the development of blockchain technology are seen as disintermediating banks and governments from monetary transactions. Oh my gosh, if you're a bank, and this is a bank right here, they used to give these out when you put money into a bank. This shakes up the incumbent players and the innovators alike. This is dramatic, cutting out the middle person, the intermediaries, lowering costs. You might say democratizing data retention and security. So disintermediation cuts costs, hopefully reduces errors, and speeds up delivery, but not in all cases. Some of the underlying technology with blockchain is a little clunky, not that fast to handle high volume. So blockchain is more than digital encryption. It's infrastructure, it's digital architecture, it's digital scaffolding. But here's the hope that we alluded to earlier: the notion of blockchain as a social good. Some even claim it can reduce poverty and empower the powerless. Now here's why. Blockchain can eliminate many fees and enable online buying and selling. It has the potential to aid the unbanked who do not have payment cards, credit cards, or bank accounts because of cost, inconvenience, or even a lack of an address. So the hope of blockchain is that it can address some parts of financial inclusion. Here's some examples. Think about title to property and identification and verification based on blockchain. This could be really useful in developing countries and for the underserved in the United States. People can create capital and grow wealth based on owning property. That is a big theme here at What's Next with Money. We talk about financial planning principles, but we talk a lot about the goal of ownership. And ownership can lead to charity, it can lead to multi-generational wealth, it leads to options and creativity by creating enterprises. But people have to have clear access and title to property. So folks have talked a lot about the informal economy, and blockchain might formalize aspects of that formal economy, even cutting down on a big problem we all have, and that's ID theft. So escrow and title companies for title verification are very expensive and slow. And lower income, lower wealth people, their ownership rights are often not realized by them, the owners, because sometimes they just can't prove it or can't afford to prove it. But once verified, land, mineral rights, even rights to our identity, the idea of controlling your own data, possibly can be monetized as capital, as an asset. And a lot of this thinking and practice has come from Hernando de Soto, who is a Peruvian economist who's worked in Central and South America on title reform for the powerless, those that are truly underserved, as they've gained title to land through records. The informal economy has become formalized. They've moved to become capitalists. They've moved to become owners. And guess what? Those assets, that little piece of land, can be groomed, improved, combined, even pledged as collateral for a loan. So stay with us. In just a few seconds, I'm going to give you something in this area of blockchain you can really take to heart. So be sure to hit that subscribe button and the like button, and don't forget to share. So here's the bonus point I promised. Other blockchain issues. It involves government regulation, the handling of transaction volume, and this deals with exchange infrastructure issues. Can it handle more activity? Can blockchain aid in fraud and crime fighting? And blockchain has a wider use cases and adoption. Here's what I mean. Recently, I was leading a federal agency's consumer advisory board, and we looked at fintech issues. And by the way, there's even a blockchain caucus in Congress. Anyway, corporations are talking about it, and with artificial intelligence, AI, blockchain is being incorporated for a variety of uses. You can actually hear it in some of the corporate ads. So, will blockchain be used to help folks struggling with identity protection, ownership verification, growing their money, and trying to find ways to build capital? The answers may lie in the nonprofit sector. And here, when I worked at that consumer advisory board and eventually chairing it, I researched fintech startups, community-based technology navigation organizations, these were nonprofits, and the early adopters in other countries, developing countries, that were using blockchain and apps to lift communities and people out of poverty. So as you hear of digital currency announcements and efforts to democratize personal finance and money with the goal of financial inclusion and to grow opportunities for people, try to look for blockchain. It's likely to be there. I have another video on Bitcoin called Bitcoin Rewards and Risk Explained. Remember, new episodes of What's Next with Money are posted on Thursdays.